speaks on the topic unlocking capital, accessing funding opportunities for sustainable business growth. And that is no other than the one that needs no introduction, Yemi Kerry, the board chair, Lagos Angel Investor Network. Please, a round of applause. But please, we need her. Thank you so much. Thank you so much. Thank you. Please, a round of applause for her. There's the introduction. What's to media? Thank you so much.
Thank you. Good morning, ladies and gentlemen. So I will see myself. Two things distracted me today when I was coming here. First is this thing that I'm wearing. It makes noise. You know what? The cows, it makes noise when you're walking around. And I just can't, it distracts me. Good morning, and I'm really happy to be here. It's a real privilege for me to be discussing this, because this is one of the issues that is closest to my heart. Accessing funding opportunities for sustainable business growth. We do take time out to discuss this. I facilitate at the Lagos Business School, the EDC particularly for SMEs. So if you haven't been there as an SME, I think you should go in there and see what classes you can take that would augment your business. I wrote the speech, but I think I'm going to converse more so that we can benefit really from all that we have said. My keynote has been summarized by the gentleman. Sorry, I don't know your name. Obafemi. A lot of the contents that I have here has been summarized by him. You know, as entrepreneurs and founders, you know all too well that running a business in Nigeria requires grit, innovation, and an almost relentless sense of hope. If it's not NEPA, it's the taxman. If it's not the taxman, it's your accountant, it's your salesperson, is your machine not working, something. And while you're just cruising, they just bring out something else that destabilizes you. And so for you as an SME or a business owner, you need to understand that the journey is lonely and it is long, and that you will continue to surmount issues that will come your way. Little did you know 5 years ago or 3 years ago that the foreign exchange market will destabilize you. A lot of SMEs have shut down based on that. One of the things that is important to know is if you're leading a business in this country, you must be ready to be resilient. And like they always say, these two shall pass away. Slide 1. My slide 1, I tried to put on the funding landscape, or that as I understand it and as I've seen things. Nigeria's SMEs, MSMEs, they remain the backbone of our economy. And if you look at the SMIDAN report of 2020, I don't know if there's a follow-on one, Nigeria has 39.65 million MSMEs, making it 96.9% micro enterprises, that is those that are under 10 employees. They contribute 46.31% to the GTB, and therefore they employ well over 50 million people. That's roughly about 84% of Nigeria's workforce. Therefore, this is a critical pool of businesses that is holding our economy grounded. Yet, despite the size and the significance, only 11% of MSMEs have accessed any form of credit from banks and government agencies. If we look globally, the IFC, they estimate that Nigeria's MSMEs financing gap is about $158 billion. That is part of a global gap of 5.2 trillion annually for developing economies. There is a major lacuna in terms of financing the SMEs. Meanwhile, over 70% of Nigerian SMEs fail within the first 5 years, and more so within the last 2 years because of those that relied in the foreign exchange. But things are changing. We are witnessing an evolution in the funding ecosystem. For traditional bank loans to newer, more flexible and inclusive models, the landscape is opening up. So let's look at a few of this. Next slide. Revenue-based financing. So instead of the fixed loan repayments, businesses repay investors using a percentage of monthly revenue. So I give you 10,000 naira as a facility for your growth of your business. And as you make money, you give me a certain percentage back. So you repay back with ease. And therefore, it is more amiable to your business, no stress, and this flexible model is gaining traction through platforms, PayHippo and Lendha, Lendha. So these are the types of, I'm just going to be giving you examples of where you can go and leverage these funding models. Invoice discounting and supply chain financing. Trade lender, Lenda, trade lender, allows businesses to unlock working capital by turning unpaid invoices into cash. They are not the only ones. There are others. So if you look for their competitors online, you'll be able to get others that can do that. This is useful for suppliers dealing with large retails from the FMGCs. Crowdfunding and peer-to-peer lending platforms, Niger Fund, Farm Crowdy Agric focused. Thrive Agric is also allows SMEs to raise funds directly from the public. Now the SEC is issuing out licenses if you want to do crowdfunding, and then it allows you to pool money from individuals and the public to be able to finance your business. Green and ESG investing. Now, if you're following the trends or global trends and the trends of things that are happening, you would know that the ESG, that is environmental, social, and governance, is becoming more and more important for organizations who want to fund. And so there are organizations like Olon that focuses on renewable energy that would advance you some funding for your business. So, and then they look at the kind of impact, a lot of companies that are now doing clean energy and recycling and climate agriculture. Angel investing and venture capital. Angel investing, Iron Rising Tide Africa, we have a bias, we're doing gender lens. Therefore, we invest in female-owned, female-led and gender diverse teams and management. Or if you have a product or service that is, has a gender lens, would finance you. And what the angels do is that they meet you, they invest in you at the very early stage. I think Solomon will talk about this during the panel. At the very early stage of your business, where your friends, family, and fools have already invested. So we take a risky portion of your life cycle, phase of your business, and we invest in you, taking a hedge that your business will do well. And if it sinks, our money goes. But then after you have been able to grow your business to a certain extent, the venture capitalists will give you a larger chunk of money, and then they will invest, larger amounts of money. So if you're talking about the value chain for angel investing, if Rising Tide Africa invests in you, our own exit will be looking at Arua Capital to give you that large chunk of money, so that when they invest, we go out of it. Now, this one is particularly very interesting because it's the first non-entrance bank. It's called the Alternative Bank, a subsidiary of Sterling Bank. They offer ethical and Sharia-compliant financing options. The model focuses on partnership-based lending, where the bank shares in the risk and the profit of your business. This is especially appealing to entrepreneurs who prefer flexible and non-collateral based asset-backed financing. So all of these models are beginning to come in, and it's important that you keep your ears to the ground, because I find out that a lot of, when you say access to finance, it is not that these opportunities are not there. It is not that the LSITFs do not give you money. It is because you are not aware really of what is going on in the environment. But having said that, we still have a lot of SMEs that struggle. They struggle for access to capital. And I've tried to itemize the 6 major hurdles that lack of collateral and credit history. As angels, we invest, we take a chance on you, right? I'm investing as an individual from my own pocket, and I know I'm taking that risk. However, the institutions that are going to invest in you have other people's money. And so because of that, they're going to be looking at how can I de-risk this investment that I'm going to take. And that is why a lot of them ask for collateral. How can I guarantee that this money I'm giving out is going to come back? Because it's really other people's money. But a lot of MSMEs do not have the kind of collaterals that the organizations ask for. And so that really is a struggle. A friend of mine went to BOI and wanted to get a loan from them. And at the end of the conversation for her, it was, maybe I should I still sell the land and get the money, because they're not going to take my land. They want building on it or something that has more assets. So if I sell the land, I will have the money, and then I can do that. So the kind of collaterals that are being sought is not that friendly to the MSMEs. So one of the things, Carbon and Rain Money are changing this by offering loan based on cash flow and digital transformation history. So if you go to Carbon or you go to Rain Money, they're not looking really at your building and house and whatever it is, the assets. They're looking at other ways of collateralizing. And so for you as an SME, you have to formalize your revenue streams using tools like QuickBooks. If you cannot even afford QuickBooks, you can look at even ordinary Excel. Just make sure that you're documenting. There is also Kippa, K-I-P-P-A, and you can use that to keep your records. It is important that they see traction and that they see that your cash flow is doing well. Then there is the issue of inadequate financial records. This one, it is, I don't know how many of you keep your books properly, but it is one of the determinants of whether I want to give you money, even as an individual, not to talk of an established organization. So, a market woman sells about 500,000 worth of goods on a monthly basis, but she has no records. And she just says that I have sold. How am I going to believe that? So it is, use simple accounting apps or even Excel to track income, expenses, and inventory. Partner with there are some local fintech offering bookkeeping services that you can look for that can, help you with keeping your records. There's also very low financial literacy. Many SMEs don't understand loan terms, how to calculate the return on their investments, and this leads to poor decision making, right? So if you don't know how much your loan is, what the interest rate is, how much it will affect, how it will affect your business, if you don't understand all of those terms, then you're lost in the conversation of raising funds. And so you have to leverage on, she will talk about it, LSI here, places like Faith Foundation, Tony Elumelu, they offer and provide business training and finance training. And I heard Obamefemi say that the church also provides all of those. One of the things that I must stress here is that you need to particularly take up all of these opportunities. Look at it as an investment. The time you spend going to understand all these things is an investment into your business. Don't just say that you're going to sit down there, you're not going to understand, and you don't ask questions. And it's not supposed to be burdensome. It's for you to be able to know that once you attend one of these, it will give you more clarity for running your business. And then there's the issue of high interest rates. Commercial banks rates can exceed about 25%, which is not feasible for many MSMEs or SMEs. That's why the Development Bank of Nigeria, BOI, AFD, are essential. They give lower interest rates to MSMEs. You need to find out, SMIDAN has a fund, you need to find out how you can get access to it and try and understand the eligibility for accessing those funds. Then, this one, even if you have run your business for 3, 4, 5 years, I see this on a consistent basis. Your statutory requirements, your regulatory requirements. I've seen people that have run a business for 5 years and are looking to grow the business to the next level. And when you ask for this, who are the directors in your company? They have no clue, because they took a company that maybe their parents registered, or they registered when they were girlfriend, boyfriend with somebody when they were younger, and they took that company and they started running with it. And so they didn't take time to change the directors that are in the business. And that for any investor is a no-no. So please look at your statutory requirements, your regulatory, pay your taxes. Anyway, nobody needs to tell you again. They are very awake now. If you're running a business, if you've not seen the tax man, that means that you're not submitting your tax reports. You need to submit your tax reports. It's better to face them than to avoid them. So seek out one-stop shops, platforms like SMIDAN's SME portal, and they will help you formalize and connect you to funding. Perception of risks. Investors and banks see SMEs, especially women-owned SMEs and youth-led SMEs, as risky, and most times they see it as informal. So you have to de-risk your business. You have to join business communities. You have to build a digital footprint and show consistent revenue over time. Use endorsements. I know a lot of you are good with what's that thing? Social media. Use testimonials from your customers. Use your successes. You have to amplify your successes and to build your credibility. Okay, slide 4. I'm only seeing myself. I'm not seeing my slides. Okay, I've said all of these things, but then how do you position yourself to be able to access this funding? Unlike startups that are high growth organization, most of the SMEs are focused on building stable, profitable, and sustainable enterprises. That means you sort of have to grow organically. To attract funding, whether from banks, DFIs, alternative channels, you need to focus on structure and credibility. Those two things will attract any investor to you. So get your house in order. 1, register your businesses with the Corporate Affairs Commission. Open a dedicated business account. Don't mix your personal with your business. I remember when I started off my company, before I got my board of advisors, I was, anything that the company makes is also mine. After all, I wrote the check and I got the deal, right? I went and did everything. So the money, the revenue is all mine. But one of the first shockers I got as I started trying to structure my company was that my board of advisors asked me whether I have a letter of employment. And I'm like, so who's going to sign that letter of employment? Am I employing myself? But what you need to realize is that your company is a separate entity from yourself. I'm sure a lot of you have heard that. And it truly is a separate entity. And so you must treat it as that. So if you have to write yourself a letter of employment, write it. If you're supposed to be entitled to 200,000 a month as your salary, write it in your account, even though you are not yet making that 200,000. Now, what that does for you is by when you start to make money, the company would be owing you for the months in which you have not collected your salary, and therefore you can then draw down. The second thing was that I had to separate and be on a salary. And I was asking them, I said to them, how can I survive on this money? That this cannot even take me, because I was used to largessing. When I make a profit, I largesse. Then they tell me that I have to have this, and I'm thinking, how do I survive? And what they told me was that it's simple. Go and bring business to the company. When you get that business, based on your letter, you have bonus. So you use that bonus to largesse. So so I had to start targeting. It propelled me really, because I had to start targeting major deals, so that I run a technology company, by the way. So I had to start looking for major deals so that my bonus, no doubt, can survive, make me survive. So that those are the tricks of the trade. So you need to separate all of these things. The company's money is the company's money, and your money is your money. Keep basic records, and your monthly sales, your expenses, your debts, obligations, And the second thing is to understand your capital needs. It is not every business that needs funding. It is not. You need to really look at your business. If you do not know why you need funding, then you have people to go. Your network is very important, right? So I've dropped a lot of names here. You need to go to the church mentors and ask them, I'm selling, but there's something wrong. And they will look into your books and they will tell you whether you need money or not. You need to understand your needs. Is it time for you to go and start doing marketing and get money to do marketing? Or, what is it that is it time for you to even build a technology platform? It may not be for you. You might go and then partner with someone that has already built, right? So you need to understand your needs. You have to have a clear business story. You it's not just slides and everything. What are you selling? Who are your customers? What makes you and your business profitable and competitive? What value are you bringing to the whatever business that you have? But aside from, all this financing issue, there is a need beyond capital. So what else do you need? Sometimes when you are, it is not just money. You need guidance, you need structure, and you need access to opportunities. You have to leverage the SME desks in banks. Even if you don't have an account there, walk in there. They will see you as a potential client and they will answer you. A lot of banks have SME desks. There's GT, they have SME Market Hub. They help small businesses go online and reach more markets. Access Bank has the W initiative that supports women-owned SMEs and finance, training and advisory. FCMB has an SME desk, and they are very good with SMEs, and you need to go in there and see how you can leverage them. First Bank and UBAs, they specialize in SME lending with lower documentation requirements. So you also need to tap into the SME-focused consultings and support programs. Your church has one. PwC runs an annual SME survey and provides accounting support. Deloitte, Ernst & Young, KPMG, they all have SME support, and they offer capacity building. Faith Foundation, Leap Africa, the Enterprise Development Center at the Pan-Atlantic University, they run mentoring, digital training, and access to finance programs. So don't just also neglect mentoring. Mentoring is important. I have a mentor for different things in my life, right? And for my business, my mentors evolved to become my advisory board, and then now have evolved to become my board of directors. There are people that have gone this journey ahead of you. You're not the only one in this business, and you're not the only one just starting and struggling. So you need to find the right person to start discussing issues with. You're not digressing. Whatever happening in your life affects your business, except you're one of those good people that can separate it. So if you're having domestic issues, it will affect your business. So you need to find a way to sort that out so that you be more productive. So you have to find mentors in all of this. I'm not talking about people that you go and gossip with. I'm talking about people that will really look at your issues and discuss your issues with you and give you a probable solution. In conclusion, I've finished. The future belongs to the prepared. I'll leave with 3 takeaways from all that I've said. The funding landscape is changing. There are many more tools today than ever before, from alternative bank to angel investors to crowdfunding. So please explore them. Secondly, your business must be ready. Your structure, the financials and recording, polish your records. Your documents are of value to you, right? Thirdly, sustainability is not just a buzzword. When people hear sustainability, it's a business advantage. So, and that is what investors look for. The kind of person that is resilient, that can stand the test of time, right? Stand the test of time, right? And if your business is impact driven, I always tell people that there's a lot of talk about social impact investments, and it's for real. The more problems you solve for the larger good of the community or the populace, the more your business will be successful. So don't wait for the perfect opportunity. Start now. Structure your house, seek knowledge, position strategically, and remember, capital chases regardless, not just ideas. Thank you very much.